UK Finance Minister raises taxes by $52 billion to fund big upgrades to health and education. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Elena Casas. British Finance Minister Rachel Reeves has announced £40 billion of tax rises. That's $52 billion, the biggest since 1993, in the new Labour government's first budget. She blamed the previous administration, which she said hid the cost of its tax cuts.
Together, the hole in our public finances this year, which recurs every year, the compensation schemes that they did not fund, and their failure to assess the scale of the challenges facing our public services means that this budget raises taxes by £40 billion. Any Chancellor standing here today would have to face this reality.
The biggest hike comes on employers' contributions to social security, which she said would bring in $25 billion, with higher tax bills also on capital gains. She also announced a 6.7% rise in the minimum wage and promised significant investment in health, education, transport and new housing. Well, I'm joined now by Vicky Price, Chief Economic Advisor to the CEBR. Vicky, hi, thanks for joining us. Rachel Reeves faced some very tough choices in order to find funds. What do you make of where she's chosen to find them?
Actually, putting a lot of that cost on businesses may backfire, but this is where most of the money is coming from. So what we find, therefore, is that it is because they couldn't do anything on employees, had to put all the emphasis for raising the money that they needed on businesses.
In the gilt markets, yields fell while Reeves was speaking, but they spiked once the market had digested the speech to hit a high of 4.4%, Britain's highest borrowing costs since May. Reeves said she will meet her target of net debt falling 2 years early, but at the expense of higher short-term borrowing seized on by the opposition.
A few weeks ago, the Prime Minister said the budget would balance the books. But this budget does no such thing and reveals that they haven't been straight with the British people, because today the Chancellor has launched an enormous borrowing spree, saddling our children and grandchildren with billions upon billions pounds more debt, pushing up interest rates.
We're going to have bigger borrowing this financial year than was expected before, something like 127 billion. We're going to have borrowing continuing over the period of this Parliament, and it still will be about 70 billion towards the end of the 5 years, which is still quite large. And the question is at what interest rate the markets will be prepared to lend that money at.
The Independent Office for Budget Responsibility delivered a damning verdict, saying the package won't boost UK growth over 5 years. It did upgrade growth forecasts for this year and next, but downgraded them after 2026.
It is really questionable whether some of the changes that they have announced are necessarily going to do anything very much for growth. The Office of Budget Responsibility seems to think that there will be some impact of this. But if you look at the forecast that the OBR has put together, they're not really very different to where they were back in May. A little bit better for this year, like everyone else had done anyway, in terms of upgrading the forecast. But from then on, really very little change for the years ahead.
That's Macro Matters, and don't forget you can watch more videos on Reuters.com.